Good morning, everyone. So look, what I'm going to talk about is I'm going to try and just connect some of the incredibly exciting work that's happening in the blockchain space. And as Jerry was saying, we're doing a lot of research work in the frontiers of this. We're building courses. We're seeing a lot of uptake and development of this exciting digital technology. And what I want to do is to connect that to COVID and explain what the basic relationship between this pandemic, a viral pandemic that is affecting the world, and the implications that has on blockchain technology, which is one of these things that's actually quite obvious once you sort of think about it, but I'll argue that it's quite profound. And tie that back into the accounting profession, because once we sort of see these connections, we'll see how this all links back together again. So the talk is going to put together two parts of the story. One is the work that we've done on blockchain as an infrastructure, as a sort of digital economic technology that is providing sort of a new layer of economic infrastructure in terms of payments and contracting and other parts of the base layer of the economy. Talk to that. But also, as Jerry was kindly mentioned in our introduction, a book that we've just released, which is dealing with the economic policy that relates to how should governments respond to this pandemic. Some of you may be aware, here in Melbourne, we're under lockdown again. And we're sort of in the very early stages of initial government response to the initial shock. But what's coming is something sort of there's a lot more that will be following after this around how economies adapt and adjust to this. And I want to put these two ideas together around the pandemic shock, which we're about 6 months into now, and what that will do to the economy, what it will do to digital technologies, and what it'll do to specific professions, including especially the accounting profession and related ones. So this is the two ideas I want to talk through today. So the basic idea here is COVID is a shock to the economy. It's a shock. It's a health shock, a biological shock, a viral shock that causes illnesses. But the economic implication is how we respond to that, and how we respond to it is by distancing. People now can't be as close to each other. And that's it, right? There's that simple implication. But what that means is that most of the economy that we've had prior to 2019, in almost every part of it relied on people working close together, interacting in markets, interacting in factories, interacting in universities, close together. So we need to sort of rethink what will happen to an economy when just that fundamental, when we can't just do a fundamental thing. So this is the implication. The argument that I want to make is that, and we've already started to see a lot of this already, is that what COVID does is it accelerates technologies that don't require direct face-to-face interaction. What that means basically is digital technology. So we move to the internet. We move the economy to the internet. We move education to the internet. We move everything we possibly can to non-face-to-face digital intermediated interaction. Now, to do that, we therefore need the infrastructure to do that. That's what blockchain is. So the argument I want to make is that the impact of COVID on the economy, and therefore on technology platforms, on innovation and so on prospects for jobs, on prospects for training, works via this notion of rapid digital acceleration of adoption of digital technologies. A key one of those is blockchain. So the argument that I want to make is that COVID accelerates blockchain adoption. All right. So what does this specifically look like? There's an economic effect that we see first, and we're already in this process. So the first one is we all work from home where possible, or we work through digital intermediation, through ways of separating production. That's already we did that within the first few weeks of that process. What that meant was the drive to work from home meant that we all had to rapidly upgrade the technologies that we were using to do that. That accelerates digital adoption. The very fact that I'm talking to you through my computer rather than on a stage is what I mean by that. This has happened across every sector where it was possible. In the education sector, universities have largely shut down as physical objects, but we're still now working through educate from home. Where possible, the health sector has adapted to enable telemedicine, which is something that they've been working on for 20, 30 years. Suddenly, they got good at that, mostly because the resistance to adopt it fell. There's a number of sectors that haven't been able to do this at all, particularly tourism is one where we're seeing an obvious collapse in that. But each sector is going through its own process of rapid adaptation to what it means to have distributed production and distributed consumption, which means large-scale digital adoption. The other major, so you've got two things going on there. You've got a new set of economic rules, and you've got a new set of technologies that are required to do that, digital platforms and the things that fit in with that. But the further implication is creative destruction. And this is, again, a key point here is this is not a temporary shock that is hitting the economy and we will go back. This is permanent. The reason it's permanent is because of the digital adoption. We've all adopted these technologies. On some margins, they don't work very well, but on many other margins, they work fantastically well. And it was only the fact that we had there were significant barriers to actually joining these things that held us back on that. So what we're going to see is creative destruction in the sense of there are some parts of industry that are never coming back. There are some jobs that have been lost that are never coming back. There are some firms and parts of industries, not whole industries, just particular things that were taking place. And this might be some things that some firms are doing or some segments of some industries that are gone and are never coming back. However, there's also increased demand for new things, particularly digital things, online business models, sets of skills to facilitate digital interaction. So there's both creation of new demand for digital affordances, digital technologies, digitally compatible skill sets, and destruction of jobs, firms, parts of markets, parts of industries. So that creative destruction, that's what we're going through now. We're in the middle of that process. We won't get to see the full force of this, I guess, for about another 3 to 6 months when we realize which firms have gone bankrupt, which bills aren't being paid, which jobs aren't coming back. We're in the middle of that process right now, but we're starting to see the outlines of it. So this is a sort of key point I want to make here is this isn't a shock that we bounce back from and go back to where we were before. We're not going back to December 2019 or even March 2020. That is gone. The economy has rapidly evolved, and it has rapidly evolved in a digital direction. So what we don't know yet is the outline of the full set of what the new shape of industries, firms, and jobs will look like. We're going through that process. But what this means is that from an economic policy perspective, there's two things that are going on. One is the cushioning the shock, and this is all of the work that governments are doing. In Australia, it's called JobKeeper and other sort of things where you've got governments essentially paying wages for workers that have been laid off or providing resources to firms that are in trouble. But that initial welfare cushioning, that absorption of the shock, that's temporary. We're in the middle of that now. A lot of things don't look as bad because that is going on. That's exactly what's meant to happen in any sort of normal business cycle process. You have a recession that is cushioned by government activity that runs up debt and increases welfare transfers and payments. But again, that is temporary. The next phase is going to be the more interesting and challenging one, which is the process of adaptation to this structural change. Now, that requires a different function from government, and the main function it requires is essentially loosening of the economy, mostly deregulation, deregulation in labor markets, deregulation in industries, to enable rapid collapse of what needs to collapse and rapid rebuilding of what needs to be rebuilt in a way that we don't quite know what that'll look like yet. So this is the pivot to growth, and what the role of government there is supporting that process. Universities play a key role in that in terms of research and helping with that. But largely, the next phase we're about to enter into is government's dealing with this process of rapid growth, but growth in new directions where the jobs that have been lost will need to be replaced with new types of jobs. So we're going through that process now. This is the economic consequences of this. All of this is enormously challenging and difficult. All right, the innovation effect is also deep. What we're seeing from COVID, the initial shock, is a powerful acceleration of trajectories that have been in place for a long time. The internet and digital technologies have been around for 20, 30, 40 years. Blockchain's been around for 10 years. But all of those technologies have been moving relatively slowly because they are still competing with an industrial economy, with industrial era ways of doing things. That has been massively accelerated in the past few months, and we're right in the middle of this transition right now. I want to characterize it as a transition from an industrial era, and this is an industrial era that's played out in some countries for over 200 years. In other countries, it's really only the last 40, 50, 60 years. But an industrial era has suddenly, rapidly, everywhere began a large, significant pivot into a digital economy. And it's a digital economy everywhere. Now that's gathering up all of the affordances and infrastructure and skill sets of the internet, of digital, and also of blockchain as the latest layer. So this is what has happened is all of these trajectories were already happening. We are already going in these directions. We've massively accelerated that in the past few months, and this is the whiplash, the uncertainty that we're going through right now is what that will look like. I want to suggest that there's a huge amount of destruction that's about to happen, is already happening, whether you can see it or not yet, in terms of industries, jobs, firms that have been lost. But there's also a huge amount of creation, whole new industries, whole new business models, whole new types of skill sets that are going to be reborn in a natively digital space. And this is the huge advantage. This is the opportunity. I think we're looking at a period now that is massively difficult and complex and costly and hard to go through. But this is also one of the greatest opportunities that we have seen in a very long time because of the acceleration of this process. So an economic effect, creative destruction, pivot to digital, an innovation effect, which is this acceleration from an industrial era to a digital era economy. To be specific about that, we're still not exactly sure which assets and skills have been devalued, but you can see there'll be some book-valued capital assets. You can think inner city office space, perhaps. You can think some skill sets that are adapted to particular sectors, and you can think some types of business models are going to be devalued. If you hold those assets or those skills, or if your business is based on those prices went down and they'll need to be revalued. But others have gone up, and we haven't fully seen that yet. It hasn't surfaced fully yet around. But broadly, this goes to online business capabilities and models, digital capabilities, I think, are going to be revalued. So we're dealing with a revaluation and a devaluation at the same time. The point about this is happening very rapidly, and this will be largely entrepreneurial-led in the sense that now is a time for entrepreneurial experimentation. With any rapid period of entrepreneurial development, we'll see a lot of failure and so on. So I think this is going to be an incredibly turbulent period that we're going through. Again, role of government policy is to cushion the initial shock, but to significantly deal with what is effectively massively accelerated innovation, an innovation process. So that's the sort of large-scale macro picture that we see here. And an example of, just to be specific again about what I think is coming up, the technologies of administrative insolvency, how we deal with a huge amount of failure is coming up. The insolvency practices are going to have like a decade worth of work coming up in the next few months. And I think what that's going to create is probably on the other side of this, but it'll create demand immediately, is for new technologies for dealing with insolvency. A need to have far more digitized, automated closing down, reconciliation and sales and dispersal of assets and so on. So I think now is the time we need to start being aware of thinking about and developing the technologies for insolvency around figuring out who owns what, identity management, rapid digitization of receipts, contracts, claims, and other aspects of that, digital arbitration of disputes through this process, and the other part that I think will also be necessary is to really develop markets for pushing assets back out into the market. Again, we're going through a rapid process of creative destruction where assets locked up in some places need to be dissolved and pushed back out again. I think this is going to be an enormous task coming up, and the idea that we need better digital technologies for doing so, or more automated ways of doing so, is one clear opportunity. The ideal time to have built this would have been last year. The next best time to build it is right now, but this is going to be needed very, very soon. And I think any practices that are at the frontier of this will be valuable. The other sort of part of this story is COVID drives work from home, drives adoption of digital technology, is pushing us in the direction of a more decentralized economy. And what that means for businesses is that a more decentralized economy is one that is harder to manage and monitor. The thing about a firm or everyone working in the same place is that management is relatively easy and monitoring is relatively easy, just simply because I can see you. I can see my employees. They're in the same room as me. So new technologies of monitoring and management management at a distance, digitally mediated management, and all of the record keeping and accountability processes associated with digital management at a distance, monitoring at a distance, remote monitoring, I think are going to massively grow in demand. Now, some sectors have already been quite good at that. For instance, the mining industry in Australia, for instance, has actually, for completely different reasons, developed a lot of management capabilities at remote monitoring. So we might see some technologies coming out of particular sectors. The military, mining sectors, which are very, very good at that already, start to be adopted more widely across the economy for the same reason. It's just we're not in the same place. We need to use digital intermediating technologies to do so. So these are the trajectories that we see COVID is introducing into the economy. And again, the point I'm emphasizing here is there's a clear direction here. It's towards digital. It's towards platform. It's towards digital platform intermediation. It's towards a more decentralized economy. And this is permanent. Once we start using these digital disintermediated platform technologies, there's many reasons, there's many parts of those technologies and platforms that will be far superior to how we were working in the past. We won't go back. Not everywhere. There'll be some places we'll be desperate to go back to. But I think a lot, perhaps most, definitely some, of these transitions that we're going through right now are permanent. We're not going back to the old industrial economy. We're going forward into a more digital, decentralized economy. What is blockchain? Blockchain is the infrastructure for a digital decentralized economy. So that's the sort of high-level significance of this. All right, what does that mean? One of the major things that will be disrupted here is trade. And it'll be disrupted again in a very particular, obvious, high-level way that will probably nevertheless take decades to fully work through. But what it basically means is that physical goods, things you need to touch, things that need to be put on ships, and the supply chains that make those up, they will become more regional, and we will pull back from highly globalized trade patterns. What that means is that regional infrastructure and regional agreements will start to become more important for physical trade. That's a fracturing of the world. It'll start to break into physical regions. There'll be a sort of maybe an East Asian region. There'll be a Central Pacific region. There'll be a European region, and physical goods will move through that space. But that's the opposite thing will happen to digital goods. Digital goods will now rapidly enter a completely globalized world. And one of the interesting things is what counts as a digital good. The one that has surprised me, I wouldn't have initially thought, is labor. Turns out a lot of work, skills, can be delivered digitally online. Like I'm doing it right now. So education turns out is a digital good. A lot of consulting is a digital good. Most of the service sector, most of the information processing parts of the service sector, which definitely includes accounting, which definitely includes big chunks of law, would include large amounts of health, surprisingly, are actually going to enter into a rapidly globalized world where the only thing holding them back is effectively credentialing and licensing, or ability to prove that you have the skills and qualities you want. So what that means is that we're about to enter a world that gets simultaneously smaller in terms of physical and bigger in terms of information. We are rapidly moving into a world of completely globalized information trade and more regional physical trade. That will be massively disruptive for economies. This will shift supply chains and so on. Again, what is blockchain? Blockchain is the infrastructure upon which that happens in both cases. So I think what we've realized is that the credentials industry, which is not just the education industry, it's just any situation where you need to digitally prove that something is something, that I have a skill or that this has provenance from where it is, or and so on. We're going to start to see increased demand for that digital infrastructure to do that. So trade will be massively disrupted. Another surprising implication here is that macroeconomic policy will work somewhat differently. We're starting to see it being maxed out already. So if you've been paying attention to what's been happening to global monetary policy, where it's every single government is printing as much money as it possibly can, as fast as it can. Where it can't do that, it's just issuing debt. It's doing that to cushion the shock. It has to happen. There's no alternatives to this. But the flip side is that is we're entering a world where all public finance is going to be inflated, which means that monetary policy is going to be far more limited in the future. It's going to have to pivot in a particular direction, and I'll talk about that next. We're also seeing the same thing happening with fiscal policy, just simply because of the massive run-up of public debt that has been incurred to pay the welfare bills, to provide bailouts, to provide social insurance, all of which is absolutely necessary. This has to happen. This will need to continue on for for many more months, but it's going to leave every single government in the world with significantly increased public debt and inflationary pressure. That means they won't have these standard monetary and fiscal policy levers to manipulate the economy. And what that means is that they will, in order to go to high growth, they can't use stimulus. They've already used it. What they will need to do is to pivot towards deregulation. It's the only thing they've got left, which is, I think, hopeful, good, necessary. And this is, so we're going to start to see that. That deregulation will happen across labor markets. It'll happen in sectors such as health, where suddenly a lot of barriers on things like telemedicine just suddenly fell. We'll see it across the board, although we haven't seen it. We're only just starting to see it now. But expect a lot of shift toward deregulation, simply because that's the only option governments everywhere actually have to stimulate their economies in order to grow themselves out of this debt. All right, so that's the high-level macroeconomic story. What does COVID do? I want to talk about a few specific use cases where blockchain interacts with this. Identity, central bank digital currency, and supply chain insurance. So the first one that we're starting to see already is there's an enormous, sort of post-COVID, we're entering a world where you need to prove that you have a certain health status, and ideally that you are not infected, in order to do things, in order to leave your house, in order to go to market, in order to travel, in order to go to work. So we have a kind of bio-permissioning infrastructure that is going to be needed for the economy to work. For you to just go about your ordinary business of life, you will need to prove to others your health status. So what that looks like, yet again, lots of different governments around the world and private companies and health sectors or health infrastructure is trying to build this. But what it basically is record keeping, trusted, viable, shareable record keeping. Whether that's your own personal medical records or ones that are put in for you, we're going to start to see that. The other one that we'll see is probably the evolution of passport technology to include not just who you are and where you're from and so on, but also, again, health status and checks. So a lot of identity tech will need to start to integrate with medical tech. And that will be needed for the economy to function, for travel to work and so on. So again, blockchain technology is one key part of that process. It's not the only technology that works in that space, but it is one of the key infrastructural platforms for that, along with cryptographic security and other sorts of ways of providing privacy and security and so on. So identity tech is one big space. The other one that we've learned about rapidly in the past few months is, and governments learned this the hard way everywhere, was that around the world, once the various lockdowns went into place, governments realized they needed to push money out rapidly to people and businesses. And what it turned out, again, everywhere, the US was one of the best examples of this, was that governments were very good at collecting money. Turned out they were very bad at pushing it back out again. They could collect it quickly, they could only push it out slowly. So what governments have realized worldwide is that they need digital direct infrastructure to not just receive, but also to transfer and make payments out. So effectively, this is crisis management infrastructure, but what we're about to realize is that governments around the world have had a very quick lesson in the importance of high quality digital monetary infrastructure, which is why we're seeing things like central bank digital currencies, which have a year ago where some banks were talking about them or some countries are talking about them. Now everyone is talking about them for this reason. China's been accelerating it, Sweden's been accelerating it, but I think in the next year or so, we're likely to see a huge acceleration of this. The significance of this is that if the central banks and governments start using digital currencies, so will everyone else. So what is blockchain? Blockchain is a decentralized digital currency. but they're both digital currencies. So we're going to start to see a fundamental shift towards this. The other reason that governments are very interested in this is it enables them to do monetary policy again. They can run negative interest rates. So again, a shift to digital, this time being driven by governments who have realized that digital means fast, and digital means control over their ability to push money around the economy. The other thing that we learned from COVID was that it was important to be able to see in supply chains where things came from and quality assurance and provenance. It turned out the other thing that was just as important was quantity assurance, just proving that something exists. And we saw this with the panics that occurred around medical equipment, around drug supplies, around personal protective equipment, just simply knowing where the masks were and being able to point to them on a transparent supply chain and go, there they are. In the consumer and household sector here in Australia, we had all sorts of panic buying because people started being, consumers were terrified that supplies were running out for ordinary household goods. What they lacked was an ability to look into the supply chain and just see that the things were there. So it turns out that assurance and being able to prove that something exists in a supply chain is an incredibly important part of this. So again, this is what blockchain technology and digital platforms can provide, is ways to resolve that. All right, so I'll finish there. What I've talked about today is a sort of a high-level overview of the impact of COVID on the economy and what this means for blockchain. And it's not subtle. There's a big fundamental shift has just happened. And I want to present this in the strongest possible way. This is not a shock to the economy that we bounce back from. This is a permanent change in how the global economy works. It is a massive acceleration of digital technology and digital platform adoption. This hits every single industry, every country, fundamentally all of the trends towards internet adoption, digital first business models, all of these sorts of things that have been building slowly over the past few decades, suddenly all at once accelerated, and we're right in the middle of that process. We're not through it yet. We've got a lot of destruction yet to happen. A lot of companies that are dead, we don't realize they're dead yet. A lot of jobs that are gone are still on life support. There will be a massive amount of disruption that needs to be dealt with. The economy is going through a rapid evolutionary process, but that evolutionary process is from an industrial era process to a digital era, and central to that, not the only technology, but one of the key platform technologies of that is blockchain. So how my research team, how we see this is that even though we're not seeing huge uptake yet, what we're seeing is a massive increase in the demand for this and a realization that things would actually be very different if a lot of this infrastructure was already in place. So what we're starting to see now is a recognition that different industry sectors, governments, and so on are now looking to ask, what do we need to do to build digital infrastructure for our economy? Thank you.
Thank you, Jason. I think we will now starting the Q&A session with Akbin being the facilitator.
Yes, so hi everyone, and thank you, Jason, for the fantastic presentation. I think I'm sure a lot of questions that the audience have a lot of questions. I will try to consolidate them and raise them to you, Jason, now. To kick off the Q&A session, I have a remark and question for you. So as mentioned earlier by Associate Professor Jerry Watkins, so here also in RMIT Vietnam, the School of Business and Management, we are rolling out the free new courses involving blockchain, like fintech, crypto finance, and the blockchain economy. We also have free PhD students writing their thesis on blockchain and fintech topics. So we do have a strong focus here at RMIT Vietnam on blockchain and technology. However, we haven't seen a lot of adoption of blockchain in Vietnam yet. So what do you think are the main reasons for that slow adoption? And what sectors can benefit the most from the development of blockchain in Vietnam during COVID and after the COVID pandemic?
Yeah, look, I think that pattern is observed in most places, relatively slow adoption. I think this is going to accelerate very quickly. This is my estimate of where we're going now. The main barrier to adoption in the past has always been coordination of getting all of the groups together to do this. And this is why we needed government support to organize it, or why we needed industry players or big technology firms to sort of coordinate that mutual adoption across a sector and industry. Look, I think the other barrier has always just been capabilities. So what has shifted is that those capabilities are now being built. We're training people to do this. There's more experience in doing it. What has shifted now is there's now a much stronger recognition of why you do this. So I think we're going to see a lot of shift in the near future. What we're seeing ourselves from industry is there's a lot more actual investment is taking place behind the scenes now. So this hasn't yet broken through into consumer products yet. A lot of the companies that we're working with on building blockchain infrastructure, aren't launching until next year and so on. So I think we're going to see a lot more of this actually on the surface I'd say in probably about a year from now.
Yes, thank you, Jason. So when we're thinking about the Vietnamese economy, so what do you think maybe the sectors that would benefit the most now, if in terms of the blockchain technology?
But it's a good question. 6 months ago, I would have said fintech, and I would have emphasized finance as the big obvious ones. What I'm realizing now is that supply chains and education, what they have in common is certification, being able to prove that something is true about a product, whether that product is a thing or a person, are the ones that actually have. So I think that is the much bigger sector at the moment. But and what that also maps to is identity tech around sort of health and so on, as I talked about. Fintech is still the big one because of payments. What we've also seen is rapid adoption of centralized digital payments technology as well. So I think the fintech space has rapidly caught up in terms of digitization, and blockchain is one aspect of fintech digitization. Whereas in the education sector and supply chains and trade and so on, that one is there's still a lot more opportunities to actually build quite fundamental things in that space.
Okay, thank you, Jason. So now another question, and that is, you mentioned that the severity of the COVID-19 pandemic is a trigger, massively accelerating the emergence of the new digital economic infrastructures. But actually, in terms of that, Vietnam is among one of the positive highlights worldwide in terms of managing the pandemic. So do you think now that this might put Vietnam in a disadvantaged position when it comes to the embrace of the new digital economic infrastructures?
Yeah, that's a really interesting question. There's a risk it could, right? Now, so on the one sense, on the one sense, not having a pandemic is an unambiguously good thing to happen. It means you get to be strong and carry on as much as normal. But I think what Vietnam has to be careful to do, or to take this opportunity because of it's worked very hard. People have been smart. It's had good, it's had a lot of both hard success and luck in getting itself to this situation. What it can't do is get left behind. Now, if other countries are desperately, rapidly adopting technologies out of desperation that turn out to have benefits, Vietnam just needs to be sure that from a position of strength, it also keeps up with those with that adoption. So, yes, there is a risk there, but on the whole, it's far better not to have pandemics.
Okay, thank you for that. So there's also a question from Tuấn Anh here. So, and I think you just want to know more about what are classified as digital goods. Can you give some examples?
Yeah. So again, it's a very good and interesting question, because we thought of digital goods as just things that could be turned into digital files, like music and books and things like that. What we've learnt in the past 6 months or so is that a lot of things can be turned into digital industries, and that's the challenge right now, is to figure out how to take an industry that is not yet digitized and figure out how to then add screens and digital capture and cameras and figure out ways to turn it into it in order to do it. So, health and education are ones that traditionally are not digital industries. You go and see your doctor, or you go to hospital, you work together in person, and so on. Same with education. We meet together in a classroom. Turns out you don't have to do that. It turns out that the meeting can be digitized, but we have to build up some infrastructure and capabilities, and you need some equipment, and I need some equipment in order to make that happen. And that's not easy, right? But that's what we mean by digital infrastructure and capabilities, is the ability to do that. So I think what we're seeing is a lot of new things that we didn't think of as digital industries are becoming them. Now, ones that are not yet are, the food industry, restaurants, travel and tourism are obviously not digital yet. But I emphasize yet, because there may be some margins that we just haven't figured out how to do that, how to unbundle them into their component parts and figure out what parts can be digitized. So that's in the sense of creative destruction, that's the creative part we're going through right now, is people out of desperation, or out of the fact that their industry has collapsed, being forced into this question of what parts of my sector can be digitized, because those are the parts I can recover.
Okay, thank you a lot. So I think we have a fascinating future ahead here. And there's another question from Ms. Jafam. What is the role of the government in promoting, accelerating the adoption of blockchain?
Yeah, again, good question. First of all, I think the government has two roles here. One is to support it by digitizing itself. So central bank digital currencies is when the government moves its money to a digital form. Digital identification is when the government shifts toward digital recognition of its citizens and enabling its citizens to interact digitally. So governments using digital infrastructure is the first part of that, because that enables everyone else to. So the first part, and around the world, every government has realized that. That's been a huge lesson that has been learned, is that where governments didn't have digital interaction with their citizens in terms of health or identity or travel or money, they couldn't see their citizens, and they needed to see them to deal with this. So massive acceleration of government adoption of digital infrastructure. So that's the first part. The second part is don't stand in the way of it, or don't block it, or don't do things that make it hard for industry to itself figure out how to do this. And that's the deregulation part. So a lot of what governments can do is that they can raise the cost of digital adoption by forcing industry or firms to do two things, to be both analog and digital as well, because they need to be both. So there's things governments can do to support, which has themselves become digital, and there's things governments can do to enable, which is largely to not stand in the way, and to enable it. And the other reason I emphasize that is this is economic evolution. This is creative destruction. A lot about the economy will need to change. We don't know what that looks like yet. So a lot of it will need to be experimental. The thing about experimental change is you can't plan it. You can't know in advance what it's going to be. You just have to let it happen and then figure out how to govern it and regulate it and provide infrastructure afterwards. So a lot of what governments will need to do right now is to step back, let things happen, and then come in and try and provide order where that order is needed and valuable. So I think there's some crucial roles for government here, but these are difficult. They require large amounts of investment themselves and large amounts of willingness to trust their citizens and industries to try and figure things out and experiment. So yeah, it's a very good question.
Yes, so thank you, Jason. And since you're mentioning that the government should step back, so when we're thinking about here, another question from Andrea that is about cryptocurrencies. Because cryptocurrencies are the most famous application for the blockchain technology so far. And do you think that governments would be willing to open up for a decentralized payment system without the traditional financial intermediaries?
Yeah, look, so this is what I mean by permissioning, I hope they do. And I hope they do in the spirit of just, we need, now more than ever, we need to experiment with just lower cost ways or more efficient ways of doing things. Cryptocurrencies are one possibility that could work. It might not, right? But we don't know yet. So we just need to simply allow. And the thing about cryptocurrencies is that it's not just the finance sector. It's just payments are everywhere in the economy. And we need to enable, and they can also happen inside firms. So we just need to enable experimentation with digital technologies, blockchain technologies, also other forms of automation around AI and other types of digital computer-based digital automation. To see where we can find opportunities to create value, lower costs, and because we don't know where the value really is. So, I mean, again, I hope governments take this as an opportunity or a reason to experiment and allow this sort of experimentation to happen, not because they know what's going to happen, but precisely because they don't know what's going to happen. So, I think the key concept here is a need for experimentation and crypto experimentation in enabling cryptocurrencies to work throughout the economy is one such thing. Another example of that is cryptocurrencies leave a record. They provide, if you want to experiment with electronic receipts or an ability to create ways of verifying and auditing payments that have taken place, cryptocurrencies are also a very good experimentational platform for that. And so I think if we're starting to try and figure out ways of wanting to automate in a lot of the accounting profession, the reconciliation aspects of this, and sort of other aspects of business processes, to digitize business processes, we need to enable experimentation in there. So, I mean, my recommendation, obviously, is to governments to try and do that. But the reason for that is that now more than ever, and for the next year or so, as the economy goes through this period of rapid evolution, we need to try things out.
Yes, thank you, Jason. So related to that, trying things out, we've seen a new attempt of Facebook and Libra, the Libra Association, to issue its own type of cryptocurrency. So this would be the one which is obviously not created by the central bank. So do you see this trend on a global scale that businesses, so private entities, can start to issue their own means of payment?
Yeah, absolutely. So I think the only question is who goes first, or which ones initially succeed. But this is inevitable. Large, in the same way that telecommunication companies gradually became internet service providers because they had the infrastructure and the customers. These internet service companies and social media platforms will have invariably become financial platforms because they've got the infrastructure and they've got people on there. All that's missing is that they don't have an internal unit of account. So the question is whether they end up using a stable coin or a tokenized dollar, or the question is what form of money that takes is unclear yet. But will large social media and tech companies develop their own financial systems? Of course they will. And will these compete with governments? Absolutely. Many of them are much larger than governments. So I talked before about there's two trends in trade. One was physical trade becomes more regional, but digital trade becomes more global. These big tech companies are already global in a way that countries aren't. So just Facebook is in more places than America is in that sense, right? So of course it has got an advantage over that. America has a tax system whereas Facebook doesn't. But I think this trend is inevitable. What particular shape it takes, I don't know. How many of them will be, I don't know. Whether there'll be a small number of massive ones or whether there'll be large numbers, whether every single corporation will have its own one, who knows? But again, this is why we need experimentation. And again, the other question is how these interact with government money. And this is where the central bank digital currency experimentation is important. Once government has digital money, companies will have digital money. Whether they have the same digital money is the question. Or whether these digital monies just simply trade as an exchange rate in the same way that the euro trades against the dollar. Who knows? But again, I think we're right at the beginning of that process, and cryptocurrencies are one version of that. And I think they have some very nice properties around security and governance, but they also have there's also reasons that central bank digital currencies are also have some nice properties as well. So again, we'll probably end up with a mix of both.
Okay. Thanks, Jason. So here's another question from Jonathan, and it is, are there actual examples of applications of blockchain in identity, medical tracking, and supply chain out there? So are there any prominent applications in this area that you can share?
Yeah, look, there's none that have really broken through as a successful consumer product. At the moment, it's still there's been a lot of proof of concepts. There's been a lot of pilot programs. Almost every large health organization and tech company has built something or has got a team working on this. We're working with a company here in Melbourne, PV Results, that is building out some really interesting technology. They're piloting that in Thailand actually at the moment. But we're still at the pilot stage with this. And I think, again, that will change. There's a lot of work that's going on behind the scenes. I'm aware of a lot of pilot projects that are being developed, but we probably won't see this for another year or two or so yet. It's still early stages.
Okay, thank you, Session. So here we have another question from Tim, and it is, there have been some protectionist behaviors adopted by some governments in the face of the COVID-19. So do you think this will have an effect on the growth of the digital economy globally?
Yeah, those protectionist measures we're seeing are what I mean by trade will become regionalized. I think that is also permanent. So we're starting to see and those protectionist measures will turn into biosecurity barriers, right? So we'll start to see regional trade blocks that will be formed around biosecurity trust within particular zones. I think there's going to be, governments have been through this process have learned a lot about their ability to put up borders, to control borders. Even in Australia, used to be a single country. Now we're 6 different countries with borders, with secure borders between the states. That never happened before. So we're going to see more of that in that sort of infrastructure. But the thing is, that affects physical things, the movement of physical things and the physical movement of people. But I don't have to go to Vietnam to trade with Vietnam in terms of we can. There's lots of sort of services that can be digitized and interaction. Now, those borders and those trade barriers do not affect those things. So the extent to which those borders and trade barriers that are going up now raise costs, that further pushes the economy into the digital direction that can go around those. So, I think those borders are again permanent. But what that does is it further accelerates digital adoption and pushes the economy and more and more of society into a digital direction, because that's the only way it can go around those borders. Now, that's a good thing in many respects, right? So there's the world has gotten smaller through this. There's a lot more barriers to movement, but the world has also gotten bigger, just simply because digital global platforms are how we go around those borders. So more of the economy, more things will move to those. Those are much harder to control. And as more value goes there, more of the economy goes there, we'll start, and again, blockchain infrastructure is that world. Blockchain exists on the internet. It's a technology of the digital world.
Okay, thank you, Jason. So I'm just cautious of the time. So we have time left for one final question from Andreas, and it is, he thinks that there's a massive demand for blockchain developers in the next few years. So how do you get people to get excited to learn about blockchain technology, as this has this programming part and most people are not into it? And also, do you think AI will play a role here?
Yeah, look, thank you for that question. That's a nice setup for what we're offering. The vision that RMIT Blockchain Innovation Hub and the work here in Melbourne and Vietnam has always been to prepare students for a world in which this is the dominant technological infrastructure. So we've set up, there's 2 ways into this. There's the tech side, where you're figuring out how to build, and that infrastructure is, or that capability, you can pivot it from capabilities in programming into more and more languages. That technology, that engineering capability is getting easier and easier by the day. But just as important, and arguably even more important, is the business side of this, which is the figuring out what new business opportunities, how can I take my existing value chain or business or work that I'm doing and figure out how to digitize it. What parts can be broken up? Those are entrepreneurial skills. Those are skills that require understanding of tax, accounting, law, management, marketing, economics, supply chain management, all of these sort of suite of business technology skills. And in order to sort of understand that, these are exactly the skills that we offer through RMIT University. CPA is offering these suites of skill sets, but these are entrepreneurial adaptation skills that are around developing an understanding of what the technology is, how it works, getting a sense of just where it is, and then using that to create value and to see new opportunities. The other thing I'd emphasize is that this is a new technology. It's rapidly evolving. You learn by doing. You just learn by just jumping in wherever you are and going from there. It's the best time to learn this would have been yesterday, but the second best time is today.
Okay, so thanks, Jason. I think this discussion can goes on for hours. So interesting and fascinating to talk about the future of the economy. But now we are running out of time. So thank you very much, Jason, and also thank to the audience who are raising very interesting questions. And now I hand over back to Zhang.
Thank you, Jason. Thank you, Bing. This is the end of our webinar. And again, I would like to show our great appreciation to RMIT Center of Digital Excellence and the Blockchain Innovation Hub, and to AusCham Vietnam for joining force with us in organizing this webinar. And we look forward to welcoming you back in our upcoming future events very soon. And this webinar has been recorded, and you will be receiving the record of this webinar via email in a few days. Okay, thank you, everyone. Thanks, everyone. That was absolutely fantastic, strong presentation, really great questions from Jerry. Thank you, Taiba.
Yeah, thank you all for inviting me. I really enjoyed that. That was good. Excellent questions as well.
Yeah, fantastic, Jason. Really very good. Thanks so much, Chang. That went very well.
Yeah. Have a good
All
evening.
Right. Thank you all.
Right.
Have a good day.
Thank you. Goodbye.
Bye, Jason.
We'll see you next time.
Yep.